Well, hello everyone. Today is February the 10th. Just checking to make sure it hadn't changed. 2023. I am Dale Delbridge, Benchmark Realty, Murfreesboro, Tennessee, and this is your status chat. And we're probably going to have a fairly short one. I don't know that we need to beat too much up. We haven't really seen much change over the week. And so I'm just going to kind of go back and just hit some highlights, maybe give you a little something that you can watch for to see if things happen or not. So let's get to that middle segment. If you like this content, please go to calldale2sell.com, find the tab that says on YouTube, click it, and it'll open up a page of QR codes. There you can use a smartphone to scan and get to the YouTube page, or you can just mouse over and click it on a PC. There you'll be able to subscribe to this little button over here and click the notification bell so that YouTube will notify you when each Friday's blog has been uploaded. Thank you. All right, today we can look at the top stories, but I think all I want to do is look at this one right here today to see what this, I haven't even opened it. You see it's not changed colors. We'll look at this. It says, here's what's happening with home prices as mortgage rates fall. Now this is 6 hours ago. And it's from CNBC, real estate section. Miss Diana Olick, we read from her from time to time. She is one of the people that works for CNBC, and she does a lot of articles. And here's what she's saying. In December, home prices nationally were 6.9% higher year over year, according to CoreLogic. And they're usually pretty accurate on this type of thing. That was the smallest annual gain since the summer of 2020, when the pandemic induced a housing boom. And that was just sort of pent-up demand. We've talked about that. The rates of decline from November to December, however, was much smaller than the month decline seen last summer. So they're saying, well, we're still not great shape, but we're doing a little bit better. And then we can go through a lot of this, but I don't know there's a whole lot of point to it. In December, the last read, U.S. home prices were 6.9% higher over the year. According to CoreLogic, that was the lowest annual appreciation rate since 2020. I'm just repeating what we said. Falling home prices were reflecting weaker housing demand, and obviously that's because of the cost of buying a house went up as the inflation and, of course, interest rates. And we'll look at interest rates right before we leave. As inflation, job cuts, and uncertainty, and this is the big one, the uncertainty. People are just trying, it's like, well, what do we do? We're not seeing any real leveling off of inflation, although last week I showed you that they're going to change how we're going to record the CPI, and I think that's probably going to work in favor of reducing the appearance of inflation, not really going to address inflation, because the CPI is a measurement tool, not really a correction tool like interest rates are. But they've raised interest rates so high so fast, we've already seen demand destruction and we've seen the market cool. And that puts pressure on the mortgage-backed securities market to keep trying to make money. And I saw a story today, which I won't link to, that said that actually we're selling off. Despite some of the encouraging signs, the markets were selling off here today, at least today. So anyway, falling home prices, go away, Mr. Advertisement. Falling home prices were reflected in weaker housing demand as job cuts, uncertainty, and the economy piled on to barrier put up against mortgage rates. Mortgage rates began to fall in December, and prices reacted immediately. Well, yeah, as we priced ourselves out of selling, the interest rates had to come down on the actual products themselves because nobody was closing deals. And so it's better to get a little something than all of nothing at all. That takes me to one of our other favorite sites that we go to, which is Mortgage News Daily. This is industry for mortgage lenders, and I'm not one of them. But they do have a nice little chart here. And I think we talked about this just recently. We saw as rates jumped up, it had a shock on the market. People moved down a little bit. They were competing for what loans they could get. And then they responded back up with bad economic news. And we've kind of come down. Well, if we look at that shape, as we talked about last week, we see it started down fast, and I think that's what we're talking about in December. Because look at the rates as the rates fell from, say, November, the late November down through December. As rates were falling, surprise, surprise, people started looking back in the housing market and started to buy. What we were still down. That's the point. We still were not gaining at the rate we previously were gaining. We're still positive, so I think in that regard, it's still going to be a good time for you to buy or sell your home. simply because we are still overall positive, but we are slowing in the quantity of sales. But now here, if we look at this right here, we see this last week. What did we do last week? Now remember that on the two others that are Freddie Mac and NBA, these are weekly market checks. They're done weekly, and Mortgage News Daily does a daily check. And we see that of the last 7 days, we've had only one day when the rate actually dipped down just a little bit, and it's just a cat's hair anyway, so it's not really all that significant. Now, what does this little dog leg here, this hockey stick, really mean? Probably not a lot in the long scheme of things, but we are seeing them, if you want to kind of look between December and February, we begin to level out. If you kind of took an average, for the most part, they're kind of leveling out. And as we head into spring, we're going to see a little higher demand. We're going to see a little bit more business. And I think that will probably translate into ticking up just a tad in the rates. They may turn around and go right back down. But we're going to watch next week. You want to tune in next week, and we'll take another look at this and see if they're continuing up just a tad. As we get a little bit less pessimistic, things will change a little bit. And as we go into the green season, things are going to start looking more and more attractive to us. Also, when we get down to that bottom that we just looked at, if consumers start to feel that we've kind of reached the bottom, rates fell a little bit, maybe I'll start looking a little more seriously. Now that I've looked a little more seriously, it looks like we're going to kind of flatten out. I would say that if they do flatten out just a little bit, or even if they tick up a tiny bit, that as we step into spring, that's going to bring back a little bit more of a robust recovery, and we should start to see some prices maybe level out or moderate a little bit more. And remember, when we looked at that CNBC story, they were just saying it was December when the story was written, and that was a 6-hour-old story. Let's go back and look at that little chart that we just had. So if we went from a November high, and as we start coming through December towards Christmas, the rates came down, and so did the rate that prices rose. They were down, prices were still up, but the rates were down just a little bit. So it's something we need to start watching for, something we need to start thinking about. We need to start shopping for some opportunities so we can get an idea how things are going locally. We're still doing pretty well compared to the nation, and I don't really expect that we're going to be in any too terrible shape in comparison anywhere else. So anyway, let's get to our numbers. Hello, I'm Dale Delbridge of Benchmark Realty, Murfreesboro, Tennessee. If you are currently unrepresented and would like to know how to compare up to 3 properties side by side and room by room, then go over to my new YouTube channel, Call Dale to Sell. That's one L in Dale, no spaces. Watch the demo on Real Scout, and then call me and we'll set up your exclusive ad-free account today. We'll see how we did in kind of those two numbers that we track every day. We have been since COVID. We see that in the week of the 3rd, we saw that we had 16,430 in the opportunities, and that fell over the previous period. And we see that we had 3,476 in the ones they're holding on to. They've got a contract, but they're still marketing. That went up a little bit. So we were down in the total, up in the holding on, and the rate actually jumped 2 full percentage points in between those two numbers. Now this week I have to turn my page and I have to look back. We have 16,225, which is in fact continuing to drop down in the total number of opportunities on the market, and we have 3711, and that is up. The ones that are still holding on to the contracts that are still held but being marketed went up a little bit. And here's the important part, I think. The ratio between the two of them took another 2 full integer point rise in the ratio between them, which means we're having fewer we're holding on to more, and there's fewer opportunities. So we continued last week's observation, and of course, as you know, as we just looked at, it looks like interest rates maybe going to level out a little bit. I'll have to keep an eye on it, and you'll have to watch with me to see if we do in fact start to creep back up, or if we just have a little blip and we start to trail back down. Either which way, if you get a home and we get something set up and you've got a loan, most loans will allow you to move up or down, make a change within a certain number of days of locking in. So you're not fixed at anything at this point, because we don't have anything going, but we still have maybe a positive trend. And I would say as spring comes on, we'll pick up a little more in activity. We always do. Even though we may be off from last year, we'll still be selling and buying houses. That's what we do. Appreciate you watching. Have a great weekend.